Now we're into corporations, and they're switching over to beginning corporation accounting. Instead of having partnerships or sole proprietorships, now we've got a corporation who owns this business. And each unit of ownership is called a share of stock. And an owner of one or more shares in the stock is considered a stockholder. Earnings are going to be figured out as retained earnings. It's kind of like saying profit. This retained earnings, then the company, the controllers, whether it is a CEO or board of directors or sometimes stockholders have voting rights. It depends on how the corporation is set up. That retained earnings then is determined if they are going to put that back into the business to help grow the business. Maybe they're going to give a lot of bonuses to their employees. Maybe they're going to kick back money to the stockholders as dividends, is what it's called, as a thank you for investing in their business. A lot of times when you buy the stock, it says right on the stock whether it is a dividend type payable stock or if it is just an investment stock. An investment stock means you try to buy the stock low and then you watch the market and you try to sell it when it's worth more, when it's higher, so that you make a profit as an individual. So, what do we have on the next page? A group of people that manage stockholders, a lot of times it's called board of directors. Declaring a dividend is what it is called when a corporation wants to distribute some of their profit or retained earnings to the stockholders. So let's jump into this on 14-1 and see how we do. We are working for Coastal Aquatics. The following transactions happened during December of the current year and January of the next year. So this is what happens at the end of the year. It says December 15th, the board of directors declared a dividend of $3 per share. Capital stock issued is 1,750 shares. And it says use page 14 of the General Journal. Journalize the dividend declared on December 15th. Okay, so December 15th, 2012, dividends will be debited $5,250. Now, where do I come up with that money? I would take 1,750 shares times $3 a share, I get $5,250. And I owe the stockholders, so I'm going to write in dividends payable, and eventually I'll write a check and pay that out to the people, $5,250. Documentation. There it is. M, Memorandum 162. Then, January 15th, it says paid cash for dividend declared December 15th. So we are supposed to journalize our payment. And there we go. On my next page, and can you see this? Cash Payments Journal. This is January 15th. And this will be 2013 because we went into the new year. I'm decreasing my payable, so dividend payable. And I'm going to decrease it for that $5,250. And I'm going to write a check for $5,250. And my check number is 687. And what happens is you write the check and you end up giving it to, sometimes companies have companies that they actually hire to divvy out the money to the individuals, or they have a separate division in their company for stockholders, and then they give it to that portion and they put it in their bank account and they divvy it out. They mail out checks to everyone, or direct deposits, whatever they have set up. So that's all there is to work together 14.1. Try on your own 14.1.